Hi, I'm Sean Engman and welcome to this month's Bay Area Market Report video. The big question that everyone's asking right now is if the market is finally starting to shift. The answer, of course, depends on the location and the property type. In San Francisco, we're starting to see a return to pre-pandemic trends with rents, home prices, and condo prices all rebounding so far this year. Across the Bay Area over the last month, we've seen a slight slowdown in the volume of homes sold and a small reduction in the median sales price. Both are typical of the housing market returning to a more normal cycle this year after it was turned on its head in 2020 due to the pandemic. In working the market on a day-to-day basis, I felt things slow a little bit in August for both buyers and sellers, but I don't anticipate that becoming a trend into the fall. Among my buyers, I've seen a considerable amount of increased interest since Labor Day, and I also know that there's a lot of inventory that's about to hit the market in the fall at all price points. I would expect this fall season to be an extremely busy one. Looking at specific markets, I'll start on the county level in San Mateo County. The median price of a single-family home in San Mateo County dropped from an all-time high in June of $2.094 million to $1.85 million in August. The reduction in the median price likely has more to do with the volume of luxury properties on the market at the beginning of the summer than the start of a downward trend in pricing, because while the median home price dropped 11.6% since June, the median price per square foot only fell off by 3%. Though inventory was reduced, the pace of the market continued to move steadily along. 466 total homes sold in San Mateo County in August, averaging just 16 days on market and selling for 109% of their list price. The condo market remained steady as well in August, improving by $10 per square foot to $850 a square foot in August, compared to July. The median price per square foot for condos in San Mateo County has remained steadily between $840 and $852 since May. In August, 191 new condos sold with an average of 22 days on market, and they went for 104% of list price. Generally speaking, the most affordable areas to buy in San Mateo County outside of East Palo Alto are on the coast and the North Peninsula. On the coast, we've continued to see home values appreciate as more people have discovered what the coast has to offer during the pandemic, and people look to find their second homes here. Over the past 6 months, the median price per square foot for 2-bed, 2-bath homes on the coast appreciated 15.7% over the prior 6-month period. In Half Moon Bay, the median price of a 3-bed, 2-bath home for the first 6 months of this year was $1.437 million. On the mid-coast, which includes Moss Beach, Montera, and El Granada, the median price is $1.37 million, and in Pacifica it was $1.325 million. For 4-bed, 3-bath homes, those numbers climbed to $2.2 million in Half Moon Bay, $1.623 million in El Granada, Moss Beach, and Montera, and $1.61 million in Pacifica. On the coast, particularly in Half Moon Bay, the prices for the properties west of Highway 1 tend to be above the median, while those east of Highway 1 tend to be below. The North Peninsula, including South San Francisco, Brisbane, Daly City, and San Bruno, is another area that's on the affordable side in San Mateo County, but the prices there have been surging as well. The median price per square foot of a 3-bed, 2-bath home in Brisbane, South City, Daly City, and San Bruno, the combined area, has appreciated by 16.9% over the past 6 months compared to the previous 6 months. The median price of such a home over the past 6 months was $1.448 in Brisbane, $1.385 million in San Bruno, $1.32 million in South City, and $1.2 million in Daly City. Outside of Brisbane, which is a relatively unique market, the average days on market for Daly City, South City, and San Bruno in the second quarter was well below the countywide average, and their homes went for a higher percentage of list price than the county average. Turning our attention to San Francisco, all the areas of the housing market have shown strength in 2021. With the rental market consisting of 63% of all of San Francisco's housing units, a rebound in rents has lifted other areas of the market, especially condos. Since the beginning of the pandemic, rents are still off 17%, but they're climbing from their low of December when they were 25% off their pre-pandemic levels. Home sales and condos similarly hit their troughs in December when they were 1% and 11% respectively off their pre-pandemic levels in terms of price. Now, median 3-bedroom home prices sit 13% above their pre-pandemic levels, and median condo prices are on par with their pre-pandemic levels. The rolling median price of homes over the past 3 months in San Francisco for 2-bedroom homes is $1.4 million. For 3-bedroom homes, it's $1.75 million, and for 4-bedroom homes, the median price jumps to $2.46 million. For homes larger than 4 bedrooms, the median price is $3.26 million, or $958 per square foot. The return to normal is not surprising as San Francisco has gradually opened back up, which has led to improved demand for rents. The pandemic has accelerated the exodus of lower-income residents from the city, with unemployment hitting them harder in the low-wage jobs. Conversely, government policies that benefited households not in financial distress and the upsurge in the financial markets increased the wealth among those who are more affluent. Combined with historically low interest rates that fueled a surge in demand for single-family homes, according to recent census data, fueled by high-paying tech jobs, more affluent residents arrived in San Francisco than departed over the last 10 years. And the reopening in the city has resulted in a resumption of that trend after a brief disruption. There are a few things ongoing that could have a profound impact on the housing market in the near future. The risk of increasing inflation is substantial, as the 12-month change in the Consumer Price Index approaches 6%, which is the highest it's been in 14 years. Additionally, the $3.5 trillion infrastructure plan that is close to passing could increase inflationary pressure. Increasing inflation traditionally leads to rising interest rates as a mechanism to control it, and rising interest rates could soften demand in the housing market, as it would restrict the purchasing power of many potential buyers. Perhaps more significant for sellers is the discussion about how to pay for the spending package, which includes proposals to substantially increase the top federal capital gains rate and to lower the threshold at which it applies. A couple of the proposals being considered, including one from Joe Biden, that would increase the combined rate to 43.4% for households whose incomes exceed $1 million, and to eliminate the step-up in basis rule by taxing capital gains upon the owner's death. A compromise proposal would increase the top long-term capital gains rate from 20 to 25% and lower the threshold for applying that rate to households making $400,000 a year or more. Additionally, discussion continues around discontinuing 1031 exchanges. From a housing standpoint, these proposals could really impact sellers in the Bay Area, especially those with family investments that were adversely affected by Prop 19. It could really constrict supply, as owners may keep homes off the market for fear of a large tax bill. Because the proposals would be retroactive, it may make sense for those who reported less income during the pandemic to consider selling now to avoid a substantially higher capital gains tax in the future should this pass. If you enjoyed this video, please like, comment, or subscribe. If you live in the Bay Area and are looking to buy or sell a home and could benefit from my services or know somebody else who could, please click on the link in the description. Thanks a lot, and I'll see you in the next video.